Hi, this is Randy Finney with the Right Side of the Chart, and today is Wednesday, March 29th, 2023. It's 10:17 Eastern Time. I'm starting the video, so we're about 45 minutes into the trading day, and wanted to do one just limited to the equity markets. I wanted to share my thoughts and show you a couple charts that we haven't looked at lately and kind of gauge where we're going. Start out here. This is the Nasdaq 100 Futures NQ, one of my go-to swing trading time frames, a 60-minute chart. So the key levels there are the resistance level, and then as covered recently, we had this nice clean uptrend line. We had negative divergence at the highs there, so that gave us a divergent high. That was the post-Fed initial pop, followed by the breakdown and the textbook back test, and we remain below the wedge so far. So if we zoom in nice and tight here, despite today being an up day, I think a case can be made for an objective short. What are you probably better off doing if you're not already short is wait for a failure back down below that trend line. You can see I have a minor trend line right here. It comes off the recent highs. That recent high is that post-Fed pop right there. And you come in and you capture it there. So we're a hair above it now. You also have this reaction high, and so if you look at it that way from a very simplistic point of view, you have so far you've made a series of lower highs and lower lows, so we're in a very near-term downtrend from this point. There's your 1, 2, 3, 4, and now 5 if we reverse and stay below those previous highs. And then you have a couple of reaction lows there. And so this is how you look at it. This is the intermediate term time frame, which is bullish, and the very near term, which is bearish as of now. Despite today being a strong day, we're up. You can see down below, futures are up about 1.43%. So QQQ is up about that, give or take. And I just wanted to reiterate. I'll tell you, I did last night and today, seeing the futures rise. Watching Micron's earnings report, and so the semis got a little boost today. And so I really went through the charts and to try to see if anything's changed. Let me show you. Let me just start before I get into this. I'm not going to go very deep, but I do want to show you the market leaders, and I wanted to reiterate. I was my sell signal on the market, this sell signal and staying short, because today, coming into today and looking at yesterday, I was trying to figure out, okay, should I, even though we're still right at the breakdown point, there's where we broke down from the wedge and we're trading right there, so we've gone nowhere. And however, the market's been resilient, and you can see we're up today. And usually after a breakdown, you either go and you start dropping, or you make a back test like that and then you drop. It's somewhat bullish and somewhat indicative that that breakdown is going to fail when you go into a sideways range. As I often say, prices can correct in one of two ways, or really a combination thereof, and that is you can correct when you've been going up. Prices can correct, or security can correct in price. In other words, it can drop. That's a correction to work off some of the overbought conditions before resuming an uptrend, or it can correct in time. So in time, you don't really drop, you just trade sideways for a while. And so far, that's what the Nasdaq 100 is doing. And of course, that is the more bullish of the two. It just shows at that point some demand. Okay, where am I going? I'm not trying to confuse you. So I have to recognize this. And there's one other thing I didn't highlight in the last couple days, but I will here. And what I'm doing is I'm telling you things, and you make your mind up, things that at least in recent days have been bullish, such as the fact that we made a textbook breakdown back test, and we are, again, don't get me wrong, I've made it very clear, we are working our way lower. It's just not an impulsive, far from an impulsive drop. Like I said, we are still down below those the post-Fed high and all these previous reaction lows. So that is a downtrend. So let me just be clear on that. Doesn't mean because we're correcting in time, we're not dropping hard, that this breakdown has failed or it's going to fail. I'm just telling you what it is so far. It's I'm a little surprised at the resiliency, but I'm going to get to some charts here of the market leading stocks in a second. as well as the Nasdaq 100, and then I'll make my case and I'll wrap the video up, and then you decide what to do. All right, let me show you a couple things that I have not showed you recently. Okay, so what I have showed you, and I've talked about repeatedly, and let's just stick to the 60-minute time frame, is the divergent high, the negative divergence on QQQ, right? And that is marked by prices making higher highs with indicators making lower highs, right? Negative divergence. And the last time we had a divergent low, divergent low, excuse me, was right here, and that was when QQQ was about 285.60. So I've marked that as a support level, and that's still the one, as I've said since we put it in, that really needs to go to open the door to a much bigger drop, to open the door, in my opinion, to my fourth and next, and what I call my final near-term bear market target. You know, that last thrust down if we're going to get it. All right, so I pointed that out, and that's it. So we had a divergent low there, divergent high. And then I also, about a week or so ago, I did an update on market breadth and showed you some of the things that I was watching and that were signs of non-confirmation of the rally. But then what I did notice, and I didn't point out then, and I'm going to point it out now, is that we, despite the Nasdaq 100, which to me is the index right now, I think there's the best risk reward for shorting. I know that's probably most of you saying, well, that's ridiculous. That's the strongest index right now, but that's me. Okay, so you do what you want. I see more meat on the bone for that swing short in the Nasdaq 100, which I'm holding for now and pressing those shorts. But I will point out that the equal weighted, remember in that video I covered quite a bit, the equal weighted S&P 500. So that just put in a divergent low on the 60-minute chart. And I wanted to point that out. So we had a divergent low here in the beginning of March and an even bigger divergent low recently. And so we've seen that. I've seen just since this divergent low got put in, a lot of the other stocks that were underperforming, because I highlighted about a week or so ago, up to that point, it was the market leaders, the top heavy FAANGs, Apple, Microsoft, Alphabet, Amazon, NVDA, Tesla, doing all the heavy lifting. So I'll point this out, and I'll recognize it for what it is, and there's a nice basing pattern. So if RSP breaks out, again, this is the equal weighted S&P 500 on a 60-minute chart. That downtrend line is going to be your next logical target. So the way it works is bulls get a check mark if that breaks out, and they get another check mark there. Otherwise, we could see this get completely sold into. And again, it's something I want to point out and show you. I dismissed it last week and didn't point out, and I'm still dismissing it based on my analysis of QQQ, and I'm going to get to that in a second. So I'm trying to show you the big picture, glass half full stuff, glass half empty, and how I am processing it all and what I'm doing. All right, so SPY, you can see because of the top heavy FAANGs, we did not have that divergent low. I just clicked over to SPY, and in fact, we have negative divergence right now. If I take it where we're at right at this moment, this line I just drew here, you can see we've now made a marginal new high with negative divergence on the indicator. So it's a tale of two tapes. The market leaders, the rest of the market, lately is doing well. The technicals were stronger, but you have this negative divergence on SPY, the S&P 500, and you also have, remember this, I know there's a lot of lines here on this chart. It's one of my busy boards, I call it. It's my primary board for SPY, but we had that from the mid-January lows, a trend line we broke down there, and we've been back testing. And then there's this primary downtrend line. Now that today, depending on how you draw it, you can see here, I'm gonna modify this trend line. This is how I had it, and I'm gonna take it now and I'm gonna put it up, not to try to fit what I want to see, but I'm tightening up or retrofitting or adjusting, whatever you want to call it, this trend line. Now I have that reaction very clean right on that high, almost that one there, and these two I just fitted it to. I had undercut these before, and that comes in right now where we are. So I have SPY at downtrend line resistance. What else I want to show you? Oh, IWM, the small caps They also, unlike the regular S&P 500, unlike the Nasdaq 100, they also put in a divergent low just like the equal weighted S&P 500. So I have to point that out. And what it also did, remember this was support right here, we recovered that. So that, until unless it fails, which if my analysis is correct, this is only going to go so far. I think the market leaders are going to roll over here, and I think this is a micro call. You guys know me, I don't mind eating crow. I'll make these micro calls all day long. I think I'm starting the video because I think the last week-ended short just got stopped out. The last of the the new money, the bulls got sucked in right now as I'm doing the video. I think that's probably the end of the rally, and we go down from here, and I'll show you why. So let me get to the Nasdaq 100 futures. All right, this is a hourly chart. Let me go back a little bit right here. Boom, boom, boom. Okay, so you have, again, the wedge I showed you. You have this downtrend line right here. We popped it ever so slightly. I just showed you a minute ago on QQQ, and I'm showing you here on Nasdaq 100 futures. We're clearly making so far lower highs there and lower lows. We need to obviously take out that low. We popped this trend line right here, but by a slight hair. And it's also not even, we're still working on this current 60-minute candle. So I'm figuring this breakout's going to fail. I think the rally is over right here. Again, if we can reverse here, we will lose the trend line. This will be a false breakout, failed breakout. So the longs that took it, especially active traders, that's something I'm sure a lot of active traders jumped on that with that breakout there. So if that can fail, then what you want to see, obviously you want to see this recent low get taken out. Now for all intents and purposes, we already hit that, my 12,612 support / target right there. What that means to me is that if we run at it again, it increases the odds that we're going to take it out and go on to hit my next target. And that's about a 3% drop. So again, you do what you want, but I think it's an objective short here if you're going for more of the moonshot trade, because if this plays out, and this is the way things work, guys, I like to look at things 3-5 steps ahead. And so let's just say, for the sake of this argument here, that I'm correct, and this is, we stop here and we reverse. First of all, this rally today probably, as I said, blew out a lot of shorts. I have very little doubt, and I've just kind of watched the watching a little more of the media lately, turn on Bubble TV, and yeah, the bulls are starting to really come out of the woodwork here, and they're really trying to press this rally here. So I think sentiment has quickly shifted. It has been shifting over from more bearish to more bullish lately, and that's what you need. You need that to make the market go down. Okay, so if that happens, that we should go there. And then remember, these are the additional targets, and once we take out that low from a couple Mondays ago, I think anyway, if we get even near it, we're done. So where I'm kind of going is right now my next target's about 3% below, right? But if that happens, now let me show you, and this is why I do these videos, why I talk so much and go over so many charts, because it's kind of, if one thing happens, then the next thing happens, and it's what I make a lot of terms up in trading. Right now, the charts are what I call are stacked. By stacked, okay, so we're looking at a little hourly chart here, and I'm looking at a little 3% drop if I'm right, and get rejected here to my next target. But what happens if I'm right? And again, it's a big if, but let me show you. So here's QQQ, going to a daily chart. This is my busy board, has all the lines kind of showing what's going on in the bear market. You can see all the, divergent lows are all marked, bullish, divergent low. These are the rallies. These are the times we look to cover shorts, or did, and go long for bounces, divergent low. And what do we have now? We have, since, this is to me huge. I'm sorry, this is big. Since the bear market started, I have the first big, not little, this was a little, first big negative divergence on the daily chart. All these drop, and by the way, when I say the first one, since the top, this was the market top right here. We topped right there. Technically, the Nasdaq peaked in November. mid-November, but effectively put in an equal high. Every other index, including the S&P 500, peaked right there, and so you had that divergent high. That was the last time. This divergent high was the, let's say, the second to last one in a bull market, and you still got a pretty good correction. But that's what happens in bull markets. Divergent highs on the daily are usually good for, tradable corrections that you can certainly profit from short selling. But then you buy the dip, and that's, you're on to the next high. That at least was the MO since COVID hit, right? But this one did the trick. Sooner or later, and again, there was more than just this. It was the weekly chart, it was everything else. We had trend line breaks. There were a lot of reasons we got short back there and stayed short, through, again, swinging it down this way, covering shorts along the way. Okay, so I just wanted to, again, reiterate, to me, this is big. It is still what I call unconfirmed negative divergence. Again, another term I made up just, because I like to see a bearish PPO crossover to effectively put in a lower low. As I say, these are momentum indicators, and right now the momentum is, at least in this, in the intermediate term, it's bullish, meaning that the RSI and the PPO are moving up, and should we continue to rally, they're going to keep going up, and then guess what? At some point we may not have divergence. But if we do make a bearish crossover, that is effectively, or in my book, officially put in a lower low, and it does what I call confirms the divergence. Okay, it's going to get a little better, at least for me, what I'm showing you here in a second. All right, let's go to the top holdings, because yes, in the beginning of the video I just made a case that the breadth, if you will, to try to forecast market breadth. Yeah, you have bullish divergence on the equal weighted RSP, the equal weighted S&P 500. Oh, I didn't cover it, but I think, let me see, I think we had it on the equal weighted Nasdaq 100 as well. Did we? No, not there. Let me tweak that trend line. Here's the equal weighted Nasdaq 100, which is right now at downtrend line resistance, so that's worth noting. Okay, bear with me, guys. We'll be over this. We'll finish this quickly. I'm going to go to QQQ. I need to load all the components. Okay, we're going to go to the, I've done this recently in recent videos quite a bit. I've highlighted the negative divergence on just about all of the market leading FAANGs, and Apple included, which is the big dog. I promise you're not going to see Apple, if this wedge plays out. This is a bearish rising wedge. The measured target, and remember, in a bull market you usually hit the measured targets, maybe fall a little shy. It's the widest part of the wedge. In a bear market, when bearish rising wedges play out, they usually play out for at least the measured target, if not more. And what does that mean? Well, I'm just eyeballing it there. The way you could do it officially is you just take a trend line, put that in there, measure the widest part of the wedge, add it to where the wedge breaks down. Let's assume it breaks down right here. That's going to take us right down to that 138.50-ish target. From where Apple is trading at this very moment, if that measured target is hit, again, making the assumption we even trigger the sell signal with the break of that blue uptrend line or the bottom of the wedge, you're talking a 13% drop in Apple. I make few guarantees in this game that we call trading, but one guarantee I will give you, or near guarantee, is if Apple drops 13%, the stock market's going down with it. Okay, it's also the largest holding of the S&P 500. Okay, so that's that, and I've gone over this. I've went over the divergent high on just divergence on just about all these market-leading FAANGs. But what I wanted to reiterate here, if I haven't lately, is we have this divergence on all these market leaders, not just QQQ. This is negative divergence. The last time that we had negative divergence at all, and if I missed something, just point it out in the comment section, but the last time we had negative divergence on Apple was leading up to the top, the very top right there. That was it. That was the end of the great bull market, and the beginning of what is clearly a bear market. It's a slow roll, as I forecasted it would be, a different bear market from a lot of the previous ones. But Apple, if you just turn off all the lines, say what you want to say about Apple, but you cannot argue that this is not a downtrend. A downtrend simply being defined as a stock making a series of lower highs and lower lows. So if Apple goes on down, if I'm correct, and I know very few believe it right now based on its recency bias. It's the natural inclination to think if something's going up, it's going to continue to go up. And I know a lot of folks want to buy right now. And again, maybe you're going to make money, and I wish everyone the best in trading. I see what could be a very big drop coming, and I think it may have already. I think it already started with the post-Fed highs. That's where that's what I've been maintaining, and that's why I do these videos. I just wanted to reiterate because like I said, I did since yesterday really dug into the charts, saw the futures going up tonight, and thought to myself, I was considering starting to maybe layer in some stop loss orders to start scaling out if the market continued to go up, and I still may do that, but what I want to see, I'd really like to wait and see how today closes. If today closes red, oof, boy, to me that would be close to an all-in short moment. If they fade this rally, turn around and wipe out all the gains today, because again, I try to put my head in the majority of market participants, what they're thinking, and I have little doubt, again, a lot of longs bought into the rally today, and probably a lot of shorts who were second guessing their positions probably got stopped out, and those are the things that set the way. So if we close red, in other words, it'd be a big reversal. But all right, let's forget about that. That's just my, I'd like to see it. And if we don't close red, it still doesn't change anything unless we go a lot higher. We're still in that intermediate or near-term downtrend. But look at this. That is just a beautiful bearish rising wedge pattern in Apple. And let me show you a few other things here. So Apple, you can see the PPO, but I'm going to put on the PPO histogram. The histogram tells you when the PPO lines cross. You have the PPO line, which is the orange line, that's the price percentage oscillator, and then the 9 EMA, which is called a signal line, and when you cross it, you get the bearish crossover. So let's look at where we're at right now, and this is why I think we're on the verge of that drop. I think the high was probably already in, and it doesn't matter to me if Apple wants to make one more thrust up. It's just going to extend the wedge, that's all. In fact, we could come all the way up here. There's our primary bear market downtrend line. Apple hasn't even hit that yet. So, it could run at that and still keep that divergence intact. It would just be a little bigger. It'd probably be to this point. So my longer term outlook doesn't change until we start popping trend lines like this and start undoing these divergences. So just so you know. All right. All right. So let's look at the histogram. This shows you when you're going to cross. There are no guarantees, but it doesn't take a freaking skilled technician to look at the slope of the line, where it's headed, and almost anticipate when a cross is going to occur, right? You can see here, and you can see right now. And so what I like to look at when I look at the histogram, I have these what I call hills. You have a big green hill there. There was a big green hill, right? These are green hills. There was a big green hill. Let's just look at what happened during the crossovers. I'm just going to take... here's what I'll do. I'll turn off all the lines so it's not so busy. We won't do this on each and every one, and I'm not going through all 100 stocks. I'm going to go through the top half dozen or so in the Nasdaq 100. This was the end of the bull market in Apple right here. This was the bearish PPO crossover. It came just before the high on that pullback, and you had basically a marginal new high, and then you got this red inverted hill, right? And that marked that first leg down. That was a PPO histogram was red. And what I'm going to do, let me just do this quickly. You can do this on your own. I'll show you where the bearish PPO crossovers have been since the bear market started. And then you can just take a look at the stock and see how the performance was from there. So after there, yeah, there was a little upside, but then from that point, had you just shorted it alone, and I don't, as I always say, that bearish PPO crossovers, divergences, overbought readings, those aren't sell signals, but they do kind of paint a bigger picture and help confirm a bullish or bearish outlook, especially on the daily chart. Remember, when I'm now on a daily chart, not on a 60-minute any longer, these trends, the signals that you get on a daily are for bigger and longer trades, higher percentage rallies or drops, corrections and they typically last longer. That's the and when you go to a weekly chart and you get a buy or a sell signal on a weekly, that's an even more powerful, typically longer term sell signal. So okay, bearish PPO crossover, and we had a rally, then another bearish PPO crossover right here. You got that one right there after the green hill, and you got that one right, well actually you got that down to there, I should say more accurately. Then you had one right here, and you got that last thrust down. Big green hill, and the bigger the hill the better it is. I'll say that too, because when you get into trading range like right here, see you get whippy, you get these whipsaws, but big green hill. Let me just put up the crossover, bearish PPO crossover, boom. Okay, so this carries a big weight for me in a bear market. Big green hill right there. There was your crossover. It wasn't huge, but it was, I'll measure it for you, roughly 7-8% drop. And here we are. But to me, all the better, because what you didn't have on all those other PPO crossovers, you didn't have this, the negative divergence. You just had a high level, bearish PPO. I have them all circled. I've been doing this throughout the bear market, highlighting these upcoming or pending bearish PPO crossovers for you before on both the indexes as well as these market leading stocks. That was the last one right there on Apple, and that coincided with a sell signal, break of the trend line, right? You had the bearish PPO crossover right here, you had the trend line break, and you would have swung down that 7-8% drop, or most of it, waiting for the sell signal. Here is your trend line. So where am I going with all this? Well, I put good odds you're going to get that bearish PPO crossover soon. It hasn't happened yet. When it does, that's going to be an additional check mark, and then all the better. Huge to me if Apple falls back below 157.49. That's capped every rally since this point back here, since October, or really right here as well. And now we broke out. So this is what I think is happening. This is a huge suck-in move for bulls. Lot declaring the bear market over. Buy tech, tech's rallying, tech's strong. It's a good signal for the market, blah, blah, blah. And if that fails, and look, it may never fail. So if you want to play it safe, this is what you wait for. You have a price alert set for a break below the trend line. Also, if you want to be safe, instead of 157.49, wait for a break of that yesterday's low right there, because we spiked it. See what happened? A little stick save. Apple broke out, has been back testing, had an intraday break. But I always say, if you're trading on the daily time frame, all that matters is how the candlestick for the day closes at 4 p.m. So that was not a breakdown. That was just an intraday move below, followed by a close right back above the 157.50 level. And we're above it now. So you can set an alert there. You can set an alert under yesterday's low, and or that's the big one, a break below the trend line. You can also set a price alert, at least on TC2000, I'm sure other platforms, for a bearish PPO crossover. Okay, so I'm talking about a lot of things, but if this all happens, to me that's a massive check mark, if you will, a big check mark. I'm talking a break below the trend line, and if it happens soon, then it's going to also give you that bearish PPO crossover based on the proximity of the lines right now. You can see we're 0.16 at the histogram, meaning it's close to crossing. It's usually about, when you get to that level, by the next day you have a red histogram. You could even have it today if we had a big reversal. All right, I'm not going to go through them all, but I do want to. It's very important. These are the market leaders. Make no mistake about it. If I said it once, I've said it 1,000 times. It doesn't matter what the bottom 90 stocks of the Nasdaq 100 do, or the bottom 400 in the S&P 500. All that matters, these stocks are the market, and it's simple mathematics. It's due to their heavy weighting. They of course they have a psychological importance as well. They're the most widely held companies, but simple mathematics, because the Nasdaq 100 and the S&P 500, as we trade it via SPY or futures, is a cap weighted index. So all right, so what I see here, I see the Microsoft, same thing. I see the histogram heading lower. Sometimes you head lower and then you get a little bounce, and ultimately you're going to cross. But I also see we're coming off a pretty big green hill, right? And it just represents this rally. And that's what these green hills are. They're bear market rallies. Make no mistake about it. There's nothing that I see. The only, I do acknowledge what needs to be acknowledged. Like we took back the 200 days on some of the indexes and some of the key stocks, but and that's fairly common. And a lot of times you do that, and I think you'll take them out by a little bit, maybe trade above them for a few weeks, but by most metrics, you're still making lower lows. You're in a bear market. You look at the weekly charts, and being in a bear market, you get negative divergence. Last time we had negative divergence on Microsoft, it was small divergence, but it was right there, and it was good for well into the double digits. The drop right there, that was a 16% drop off that last divergent high. The last time before that was the top right there. Okay, so I don't want to beat a dead horse, but this is important, and this is why I'm going to give my short some room, because this is the best looking bearish setup that I've seen in quite some time in the markets with these divergences. I don't have as clean a trend line on the daily chart on Microsoft as I do on Apple, so I'll watch that one. Here's Alphabet, GOGL, Class A. Class A shares had a wonky little spike. It's what I call an erroneous print, but it's legit because I checked on multiple charting platforms. This is a 1 minute chart, so it spiked up here. In other words, you don't have that on the other share class. Somebody got filled at that level. There was some print, and if you go to GOG, the other share class, you can see it didn't exist. So that on the daily, you don't have negative divergence, but it was real, and it's like I said, I have more than one charting platform showing us that technically gave us a divergent high on Alphabet. And divergence or not, watch for the bearish PPO crossover. We don't have one yet, but if we get it, boom, that's going to be a check mark. And you can see, simple stuff. This is what swing trading's about. These are your trends. There's a green hill. It was a bullish trend. There was a red hill. That was a bearish trend, right? This is easy, simple, easy peasy stuff. So we can see based on the momentum, and these are momentum indicators. Again, it shows us, yeah, we're in a rally. We're in rally mode, but the rally is losing momentum. And that's when you get the turns in the market. So I say this because this is what I do, and I've done this long enough, and I know, and I've read the comments lately. A lot of you out there seem to be getting increasingly bullish and doubting that the short trade that we're in is going to work, that I'm in is going to work. You guys do what you want, but I'm showing you again the market leaders, and that's all we need to break. It doesn't matter what breadth is doing. We've had a little surge in market breadth lately, great. But once these leaders roll over, that's it. Market's done. There's Amazon. You can see the PPO histogram is poised to make a bearish cross. Hasn't done so yet. And I will follow up when we get these. NVDA, I still very much like the semis. And there's NVDA. Look at that. Negative divergence. Clean, clear negative divergence on that high recently. We're in spitting distance of that major reaction high right there of 287.43. May or may not make it. Probably not, especially if we get this cross. Oh, in fact, the crossover is occurring today. Look at that. That's odd. The stock is up. It's up 0.85%, but yet you have a histogram. And it is because the momentum, remember, the momentum is shifting. It was going up pretty powerful, and then lately it's been moving sideways with 3 red candles. I mentioned the semis have been down for 3 days in a row through yesterday, and have a little up today because of Micron, but again, doesn't change the technical posture. I think that'll get sold. A lot of these guys will get sold into. So last time you had the negative divergence, and you had a clean uptrend line as well. And everything, I covered this one yesterday. You had that little whipsaw right there, just like you had a little whipsaw there, but there's your primary uptrend line. And that was good for a drop of about 28%. And that's the nature of the beast with these semiconductors. If you get the call right on a correction, especially on the tech-heavy Nasdaq 100, usually you're going to do better being long or short. In a bull market, obviously, in a bull trend, long the semis, and in a bear trend, short the semis. And I'm just going over the top components. I have 2 more, and then I'll stop. Tesla. All right, Tesla kind of going back and forth here. We recently we were in this little bear trend here, and we caught that. Remember, we traded that down and we covered at T2. So this one rolled over before all the rest of the big market leaders there, and we already had the move down to T2. Game that bounce, and then I mentioned the other day I like it as a short right here at that downtrend line. So if we get rejected, what you'll see here is the PPO. That'll be a little whipsaw right there. You'll probably go red again. You can see it's not been very strong. We're slightly in the green. And then Meta, again, one of the best looking shorts out there right now with the big tech stocks. Big negative, clean negative divergence. Look how much that the PPO is lagging. Look at that high. It's way down here. In other words, the divergence is pretty steep, higher highs and prices. And look at that trend line. I mean, it doesn't get any better than that. I mean, that's going to be a powerful sell signal when that trend line goes. And just from the look of it, it looks imminent to me. By the way, the PPO made a bearish crossover yesterday, thereby confirming that negative divergence on Meta. And again, if you want to play it safe, I may be proven wrong here, but then the safe bet is wait for the majority of those trend lines to break. Like I said, sometimes I like to get in front of trades, and again, I was been short lately based on the 60-minute chart. You're typically going to roll over first. You're going to get earlier for a bullish setup. You're going to get earlier buy signals on the shorter term charts. A 5-minute chart is going to trigger a buy signal before a 15-minute chart, which will trigger a buy signal before a 60-minute chart. So that's what we're doing here. We already have the buy signal. The sell signals on the 60-minute chart with the breakdowns of QQQ and NQ and everything. And that happened again Fed day there. And then all the better when we get those sell signals on the daily chart. We already broke that trend line on QQQ, but to play it safe, you want to see the leaders break down. Like I said, this market, if you really want a nice healthy correction, especially another leg down in the bear market, you need to see the leaders break. You need to see Apple and Microsoft and Alphabet. So there it is, 36 minutes. Well, right now 37 minutes into the video. I'm going to wrap it up here. Those are the levels to watch. So I just wanted to reiterate, despite, and that's why I like to do it when days are up like this. This is the day that I have very little doubt. Quite a few of you listen to my voice are wondering, hey, Randy, what are you doing? We're up 1.5% on the Nasdaq. Are you covering your shorts? You're giving up on that bearish outlook yet? Not at all. In fact, if anything, I'm more bearish today. And like I said, if we close the day red, wow, that's going to be a pretty powerful one-day move. If we can fade that rally in QQQ. Got a ways to go. Here it is. There was from yesterday's close right there. Let me move that line to the highs. We were up 1.6%. We are now up just under 1%. So there's a lot of work to be done, but that'll be a powerful gap backfill if it happens. And then it'll put us back down, down to or below the post FOMC pop right there, that candle, that box I gave you right here. All right, guys, let me wrap it up and get the video out to you. This has been Randy Finney with the Right Side of the Chart. Have a great day.